Welcome to the Blockchain Report. We discuss all things blockchain technology, digital assets, DeFi, NFTs, and much more. Today's video, we will be taking a different path in our Layer 3 quests by going through the crypto history. These are some non-chain specific quests where we just kind of learn about, different aspects of the crypto space. They do have some other ones, crypto safety, 2023 themes, community picks. So it's not all just chain specific, regenerative finance, and the crypto history. So we'll go into some crypto history for everyone. We completed that one, Curve Wars and Polygon. And if you haven't checked out our previous quests, check them out. And yeah, we will go into Bitcoin and Ethereum. 101. So learn how it all began with Bitcoin and Ethereum in this crypto history quest. Welcome. In this quest, you'll learn the fundamentals of crypto, including a brief history of Bitcoin and Ethereum and how it all began. Before Bitcoin, while Bitcoin was released to the public in the form of a white paper in 2008, cryptography and the concept of a trustless digital currency arose long before that. The first murmurings of something fundamentally similar to Bitcoin began in the 90s with multiple attempts to create blockchain technology that went along with it. An engineer named Wei Dai first described the idea of a digital currency in 1998 by publishing a paper on B-money. And Nick Szabo, another blockchain pioneer, attempted to create a digital currency by the name of BitGold, a whole decade before the white paper. So during this time, most attempts failed due to the double spending problem. Counterfeiting and copying digital currency was the main obstacle. So the Bitcoin white paper, against the backdrop of the 2008 financial crisis, an anonymous writer named Satoshi Nakamoto publishes the Bitcoin white paper in 2009. The paper describes the concept of a purely peer-to-peer version of electronic cash, would allow online payments to be sent directly from one party to another without going through a financial institution, what would now be known as Bitcoin. Most importantly, it proposed a novel way to solve the double spending problem that technologists in the previous decade were unable to solve. So the Bitcoin Genesis block. 4 months after publishing the Bitcoin white paper, Satoshi mined the first block of the Bitcoin network known as the Genesis block. Take a look at the white paper, follow the link here. And if you haven't read the white paper, it's pretty cool. I have a shirt that has it on there, but it's pretty amazing. And as a blockchain, Bitcoin continued to operate trustlessly and still continues to do so to this day. However, some developers want more flexibility with what they could build on the blockchain, and the idea for Ethereum began gaining traction. So what is Ethereum? In 2014, Vitalik Buterin and several co-founders published the Ethereum white paper. I haven't really read the Ethereum white paper, but it proposed a blockchain that would enable developers to program apps and tokens on top of the Ethereum blockchain as a base layer. Unlike Bitcoin, Ethereum would include smart contracts and token standards, which allowed Ethereum to act more like a world computer for blockchain-based applications. So think of Ethereum as like an operating system like Windows, Mac, Linux, and you can build applications on top of that. So Ethereum from 2014 to now, like Bitcoin, Ethereum has also gained popularity with its native token ETH as a trustless digital currency. Most importantly, however, the creation of Ethereum allowed for a Cambrian explosion of decentralized apps, or dApps, or DApps, and other digital assets built with smart contracts, including decentralized crypto exchanges, DEXs, digital art, or NFTs, and even entire organizations, DAOs, or decentralized autonomous organizations. And DAOs are sort of like a governing body that everybody has a way to vote, and things don't get passed until the DAO votes on it. So the Ethereum white paper, Ethereum went live on July 30th, 2015, about a year after it held an initial coin offering, ICO, to fund the project. take a look at the white paper. Then you can share this quest and learn about, I'm learning about Bitcoin, basics of Bitcoin and Ethereum. Even if you already know. Yay. So we'll verify that. And that quest is complete. Easy. Easy peasy. Next, we'll do the DeFi Summer 101. So welcome to Crypto History. In this multi-quest course, you'll learn about some key historical events in crypto and how they shaped your Web3 experience today. This quest will cover DeFi Summer. Get yourself acquainted with some of the protocols that defined the glory days of DeFi. Let's begin. So November 2018, Uniswap V1. Uniswap V1 is published to the Ethereum mainnet as the first automated market maker for DeFi. Actually, I'm going to go back and check out this announcement by the founder. So this is where it all began. It's a protocol for an automated exchange of ERC20s. Look at that. So that's pretty cool seeing that announcement. So July 2019, Synthetics. Synthetics follows by incentivizing an SETH liquidity pool on Uniswap, enabling users to earn yield by adding liquidity. This is the first incentivized liquidity program. Then 2020, Black Thursday. In 2020, ETH drops more than 30% due to pandemic fears, and the protocol behind DAI, MakerDAO, takes a major hit. The wave of liquidations caused by users' ETH collateral losing value resulted in bots being able to bid zero DAI for the auctioned ETH collateral, leading to a shortfall of around 4 million in ETH. However, this also led to DeFi Summer, a period of major DeFi growth. In the next step, you'll try Synthetics and Uniswap, two DeFi Summer protocols that still remain today. So I guess we will have some on-chain. So swap to SNX on Uniswap. And if you've already done so in the past, you can verify. I don't know if I've swapped for SNX on Uniswap, but we'll go ahead and check it out. See if it verifies. Go ahead and log in right here. Nope. So we're going to swap for a little SNX. I think we need to be on Optimism. Okay. So now connect. I'm just going to go ahead and throw some DAI in there too. I don't really care how much or how little. Approve and sign. Now you can swap. Confirm your swap. And confirm. So now that we have swapped for Synthetics. So now May 2020, Compound Protocol. In May, Compound Protocol, a decentralized lending and borrowing protocol on Ethereum, launches a program where users could earn comp for supplying or borrowing assets. July 2020, Yearn Finance. Following the success of Compound, Yearn Finance launches in July and decentralizes by distributing the YFI governance to the Yearn community. The token price went from just $6 to over $30,000 per token. Can you imagine just getting some tokens for $6 and then boom, $30K per token? Amazing. August 2020, Sushi Swap. SushiSwap launches in August and successfully drew liquidity providers on Uniswap to its own protocol. By incentivizing Uniswap liquidity pools, Sushi was able to accumulate over $1 billion in liquidity. More protocols followed by incentivize liquidity provisioning, resulting in a cascade of liquidity incentives across the entire ecosystem. Some, like Yam Finance, offered an APY of up to 1,000%. DeFi winter begins. Yam Finance collected hundreds of millions in capital, but there was one fundamental flaw. The smart contracts were never tested, much less audited by a professional team of security researchers. You can probably guess what happened next. Many of the yields during DeFi Summer proved unsustainable, and other protocols followed suit. Yet many protocols from DeFi Summer still remain today. Ooh, now we add liquidity on SushiSwap, which I've done, and SushiSwap. Maybe I should go to their Twitter or CoinGecko. Sushi. We'll just go ahead and show you how to add liquidity. So we'll go to the app. And you can connect your wallet into here. And it was on Arbitrum. So we'll go to Arbitrum, switch networks, and go to earn. And this is where you will provide liquidity. So if you want, USDC, ETH, USDT, ETH, it's whatever you want to supply. And you want to go to the Arbitrum 1 network right here. So yeah, ETH, USDC. You want to deposit a certain amount. I don't know why it says claim here when there's nothing to claim. But yeah, if you have because my wallet's not connected, that's why. So deposit, and then you add, whatever you want to add. $2. You're gonna have to have enough for both. So if you wanted to add like $10 or $100, you need to make sure that you have enough in of both assets to do that. And then approve and all that good stuff, and then you stake the liquidity. And then your quest is complete. So next we'll do a quick history of NFTs. So welcome in this crypto history quest. You'll be learning about NFTs, both historical and recent. Here's a little timeline. Widely regarded to be the first quantum for world's first NFTs, spells of Genesis, the start of blockchain gaming, rare Pepes, collectible cards that helped create the first crypto art market, crypto punks, Axie Infinity, and Crypto Kitties. Yeah, so pretty cool timeline. One of the first NFTs deployed on Ethereum was Larva Labs Crypto Punks back in 2017. Project was one of the earliest NFT generative art collections ever launched and directly inspired the current crop of popular generative profile pic projects like Bored Ape Yacht Club. Each punk is algorithmically generated and entirely unique with some characteristics rarer than others. NFT collectibles game called CryptoKitties was soon released after CryptoPunks, where players could purchase, breed, and trade virtual cats. The game was so popular at the time that it sent gas fees skyrocketing and nearly crashed the network. So evolving NFT standards, there are two common NFT standards, the ERC 721 and ERC 1155. 721 is an open standard that describes how to build NFTs on EVM, Ethereum Virtual Machine, compatible blockchains, and it's the standard that most NFTs still use today. CryptoKitties was the first ERC 721 NFT collection, and ERC 1155 is a more recent standard which enables multiple assets to be stored in a single smart contract. Any number of tokens can be sent in a single transaction to one or more recipients. NFTs today, a diverse ecosystem. NFTs today encompass a wide variety of styles, functions, and purposes, while CryptoPunks and CryptoKitties influence the growth of algorithmically generated NFT collections. Here are a few different types. Metaverse NFTs, loyalty and rewards, like Tiffany & Co., Porsche, and Starbucks. Artists and one-on-one NFTs allow digital artists to directly sell to collectors. Web3 gaming NFTs serve as in-game assets for blockchain-based games. NFT credentials and proof of participation. And you can take a look at the original CryptoKitties smart contract right here. You see it's not a whole lot of anything. So NFT sold for 69 million, or Beeple. That was pretty wild. Beeple's got a lot of cool stuff. So yeah, then have any NFT in your wallet on mainnet. So you want to hold any NFT on the Ethereum network. And I do. So time for a poll. Which type of NFTs are your favorite? I like the artist collections one. How much have you spent on NFTs? Probably 2 ETH. And I don't really care for that. And that is it. Unlock the achievement Daring Voyager. So we will pause this quest for now, as I've got to run, but we will continue in this quest with the World of L1s in the next video. Okay, we're just going to continue this last quest since my manager was able to handle things for me, so that's great. So we'll hit this last one, the World of L1s, explore Layer 1 blockchains and alternative L1s like Avalanche and more. So in this quest, you'll learn about Layer 1s and alternative Layer 1 solutions. So what's a Layer 1 blockchain? Layer 1 is a fundamental base network of blockchain platform. It excuses all on-chain transactions and therefore acts as a public ledger's source of truth. Layer 1 blockchains can validate and finalize transactions without the need of another network. Some examples include Bitcoin, Binance Smart Chain, Ethereum, Algorand, Cardano, Solana, Phantom. And differences between Layer 1s and Layer 2s. Layer 2 blockchains build on top of Layer 1 blockchains by allowing them to scale. So think of another blockchain built on top of Ethereum. It's not as secure, but it's faster and cheaper. So they typically inherit the security of Layer 1 blockchains while concentrating resources on providing utility and optimized scalability. Examples are Arbitrum, Optimism, ZK Sync, Starknet, Polygon. Well, Polygon's debatable on Layer 2, might be a Layer 1. But in terms of features, Layer 1 solutions typically consist of a network of nodes and block producing miners, storage of all transaction data, and a consensus mechanism. So the scalability trilemma. So one of these will be sacrificed on every blockchain: scalability, decentralization, or security. So how to solve the trilemma? You have sharding, which refers to the method of splitting databases into partition of blockchains, managing some specific data segments. Consensus mechanisms, which are applied to a blockchain network, ensures the best-in-class security limits. Best-in-class security limits the scalability of a blockchain. And layer 2 solutions. Blockchain developers are working on solutions built on existing network structures, which include state channels and side chains known as layer 2 scalability solutions. As a result, these are the measures that have been taken to address the trilemmas, usually in the form of new chains and layer 2s. It's time for a quiz. What is an example of a layer 1 blockchain? Ethereum. I don't know if Binance Smart Chain. I think it can be, but I don't really know. That's a good question, actually. So what is the blockchain trilemma? Security, scalability, and decentralization. What is one method of solving the blockchain trilemma? So sharding, tokenization, layer 2s, A and C. You can add your email, complete the quest. So, and I will do that on here as I verify. We'll do it live. So your email has been verified. And we will go ahead and share this quest. And we'll give that a second for Twitter to verify the tweets. Boom! And you are done, just like that. You got layers just like an onion. And we'll go back to here. Looks like we've completed all in this quest. Now we got, I wanna go into the crypto safety ones in the next video. I did a handful. I actually don't know if I did videos on these, but I will do some videos on the importance of audits and revoking token allowances with DeFi. So yeah, and I hope you guys are moving along with me pretty well. Should be close to where I'm at, except I did a few quests without making videos on them. So we'll jump into some more of these non-chain specific quests. So I hope you're having fun, and I will be having a Polygon quest video going up soon, so be on the lookout for that. And with that, that's the blockchain report. If you have any questions, comments, leave them down below, and I'll be happy to help. But that, see you on the next one. Peace.